Hey, what's up traders? Welcome to Failure to Display. So in this video, we're going to take a quick look at this morning's London session on NASDAQ, which was really hard, to be fair. Before we jump into the analysis, I just want to ask that if you're new here and you're not already subscribed, then please do go ahead and hit that subscribe button along with the notification bell so you don't miss any future videos. And likewise, if you enjoy this type of analysis and seeing what I'm looking at through the charts, you find any benefit to it, hit the like button, and also feel free to leave any questions or comments down below as well. Your feedback's always greatly appreciated. Lets me know how I can improve these videos, and also if there's any areas that I need to clarify in regards to the strategy that I'm looking at so you guys get more value from the videos. With that said, let's jump into the analysis now and see how this morning's session played out. So as we come into the London session, we are going to obviously mark out our key levels of interest, that being previous day's value area high, previous day's point of control, and previous day's value area low. You can see my previous videos if you need to understand how I'm establishing these levels. We also need to take into account the new day opening gap. Again, my previous video explains that I have an indicator that's plotting the new day opening gap for me. So we can see that the new day opening gap is around the 21,217 mark. And as we came into the London session, so this blue line here is delineating our midnight open. Price was indeed above the new day opening gap, so initially gives us a bearish bias, expecting new day opening gap to get triggered. And so today I did get up an hour earlier, as I explained I wanted to do yesterday, to try and look for something in this very first macro of the day. So this is 1250 through to 110. The strategy at this point in time is looking for a sweep of the initial buy side or sell side liquidity to then trade to the opposing side of the range. So the first half hour of trading between midnight and 12:30 will plot the highest high for our initial buy side and the lowest low for the initial sell side. We're then waiting for a run on either of those, and then an indication that we will trade through to the opposing side of that particular range. So in the first macro, we can see we attacked initial buy side first of all. We had a run on the initial buy side liquidity. Our manipulation came at this candle here. So we can see that we had an aggressive move away from the buy side liquidity, taking us into a 1 minute fair value gap that had already been respected once prior to the midnight open. That had driven price down to previous day's point of control. So we came back into this fair value gap, found respect in the fair value gap, creating relative equal highs here between Asia high and also the New York PM session high above us as well. We're building liquidity in this area. So we can see that we're going to have a nice draw on liquidity later on in the session. However, the bias will be to come back and retest the new day opening gap and obviously sweep the initial sell side liquidity. Now, unfortunately, the setup, the entry, I should say, occurred just outside the macro. So at 110, I left the screen and we had a pump back into this level. So again, attacking the high, respecting the fair value gap that we had already established was a strong bearish fair value gap. We created CVD divergence here. So I wasn't at the screen to take advantage of this. I will show you what this looked like on Tradovate. So this is that area of price action on Tradovate. We can see this initial pump up into the high. We then have a retest into this order block, these three down closed candles, and we take another run at the high, ultimately seeing that the bodies of the candles as we're attacking this high are respecting our fair value gap that we've already highlighted from earlier on in the session. And we can see delta here is increasing. So delta has created a higher high. So this is an indication that we have lots of market buys in this area trying to push price above this high, and it's unable to do so. Price is closing lower, creating a lower high, giving us an indication that there's absorption at this point. So a large limit order is absorbing all of the retail market buys in this area with the view of pushing price lower. The confirmation of our entry would be on this divergence candle here. So we have CVD divergence, we then get a divergence candle which closes over this fair value gap. The divergence candle is this red dotted candle here. So we can see we had bullish delta. So again, buyers involved, market buying this candle with an anticipation of pushing price higher, and the candle still closes bearish. The buyers didn't have the power to push price higher. Again, another indication of absorption. And in fact, we closed over this fair value gap. So this fair value gap originally was an inversion fair value gap here. You can see we closed over it with this manipulation candle. We came back tested 50% of the fair value gap. Ultimately failed to take out the high, and then our divergence candle closed over the fair value gap, confirming that we are most likely in a sell program. Therefore, the entry would be at the close of that divergence candle, stop loss above the high, only 4 points or so, because we're expecting this to be a protected high now. We've seen that there's a large player looking to get involved at this level on a limit order, anticipating a run lower. So this is the open of a new 15-minute candle. So again, previous videos that I've done, I will explain that I do like to take trades in line with the open of 15-minute candles. This just falls out of my current strategy, however, because as we fell outside the macro window, I wasn't around to take that. I essentially just walked away from the screen at 110. In macro number 2, we did have this push down, and then we had a divergence candle on top of VWAP at 207. However, I didn't want to take this long at this point, because the long trade, just based off the divergence candle alone, is going straight into the previous day's point of control, straight in the middle of this large fair value gap. So there's no real confirmation other than this divergence candle here to say that we're into a buy program. Obviously, we know that we've got a good draw on liquidity above us, because we've established we've got relative equal highs with the Asia high, the New York PM session high, and that generated liquidity that we had inside the first macro. But there was no confirmation in the second macro for me to go long here, so I didn't take that. So moving into the third macro, we do get a confirmed trade taking us up into our relative equal highs. So what we can see is between the macros, we essentially generated a lot of liquidity to the buy side and the sell side. Relative equal highs up here, relative equal lows here. As the macro opens, I'm waiting for a manipulation to sweep this side of the range to then give me an entry to my draw on liquidity, which is ultimately the relative equal highs at Asia high. Our candle at exactly 3 AM gives us that manipulation, so we end up with an aggressive move out of this range, sweeping the relative equal lows that we've generated down here. We come into our fair value gap that was preventing me taking this entry because I didn't want to trade into the 50% level and hit resistance here. Well, this fair value gap now has flipped into support, so we come back into our fair value gap, back into previous day's point of control, and we get a divergence candle, a large rejection candle, a divergence candle which I'll show you on Tradovate. We can see we wick down, we have sellers trying to sell this short, there's bearish delta, a lot of bearish delta in this candle, but there's enough buying pressure at our point of interest, which is previous day's point of control, to be able to close this candle bullish. Also, to note, we close over a balanced price range here. This purple line in the middle is a balanced price range. We're able to close over this, confirming that we are potentially in a buy program. We are not respecting bearish fair value gaps. We've closed over this. So the entry for this is on the close of that candle inside the macro, exactly at the open of the hour. Running 10 points is always my target. So 10 points takes us nicely through to Asia high. Frustrating thing with this particular trade is prior to taking the high, we get this pullback into the balanced price range. This ultimately stopped me out break even. So I went to break even again. As I've mentioned before, I expect price to run through levels very, very quickly. We took the initial buy side liquidity out, but then we had an aggressive move back. We identified this order block. I'm going to get rid of out of the way. We have a bearish candle in the middle of this price range, which I've identified as an order block. We respect 50% of that order block, so it's a good level. However, we come back through my entry. So because I'm already break even, this stops me out break even before we get a quick tap of the BPR, and then price ultimately goes to where we expected and hits our target. There's a really nice reversal at this top here, creating a BPR with a divergence candle at the high. So we've swept liquidity and then we're reversing, but this happens outside of the macro again, so this is not something that I'm taking a trade on. So that was ultimately a break-even trade, a bit frustrating, and then I had further frustration in the final macro of the morning with another break-even trade here. So price has displaced lower. We've swept Asia high, we've swept the New York PM session high, so we've achieved the main liquidity target that I would have had based on the previous macro's price action. So now I'm expecting a sweep of Asia high to pull down to Asia low. So I've now got a bearish bias expecting Asia low to get taken out. So coming into our final macro, which is 350 through to 410. We create a range prior to the macro opening, so we have relative equal highs up here, we have relative equal lows down here. As the macro opens, we have a run into a breaker block. We're identifying the breaker block. As we've had a sweep of the high, this is our order block. This should have held price higher if we were going to continue bullish, but we displaced straight through it. We come back to test the breaker block. This is our unicorn model that we were trading earlier on in the year. And then we anticipate a run lower. As the macro opens, we're trading into the breaker block. We get a displacement lower. We get a pullback into an inversion fair value gap. So the inversion fair value gap is validated because we had this bullish fair value gap here. Acted as support to then drive us into the breaker block. We then displaced through it. So it now flips from support to resistance. So we expect this now, the 50% level, to be respected and price to come take out these relative equal lows that we've generated liquidity on, and then ultimately run through those lows aiming for Asia low. So inside the macro window, we get our divergence candle at 359. So again, the open of the new hour, we have a divergence candle inside a inversion fair value gap. Now this is not a great divergence candle in hindsight. You can see there's a large rejection wick here on it. So price came down. Buyers were able to buy up the majority of this candle, but it did close bearish. So we had bullish delta, lots of market buys in here. The candle ultimately did close bearish, so I entered on the close of this candle, expecting these relative equal lows to get ran. I underwent a little bit of drawdown. Price did come make an attempt for the lows and then pulled back. We pulled back into these up closed candles. So this is a bearish order block. So my stop loss was covering the high, 10 points. I was allowing for a trade back into the bearish order block here, which it ultimately did do. But this price action already had me worried because I like to see acceleration through these levels. Ultimately found respect at the bottom of the bodies of the order block, and then came again for another run at the lows. As we came for this last attempt at the lows, I pulled my stop loss to break even as we hit this low. Again, my anticipation, my expectation is that it will just run straight through these lows now, and we're going to trap anybody trying to go long at this level and run the Asia low. As we can see, we pulled straight back and then hit break even on that trade. And price ultimately, if we scroll forward, has just been consolidating since then. So no clear direction. So it was a good choice, in my opinion, to get out of this trade at break even, because price action really hasn't done anything exciting since. I'll just come up to real time now just to see if we have actually made that run. So we haven't, we've just consolidated inside the new day opening gap here. So that was the trading session from this morning. Quite a tricky session, if I'm honest with you. 2 break-even trades. The whole range for the London session has been pretty tight, so there wasn't a lot of movement or displacement in any of the setups, so it was quite tricky to trade. I hope you found that analysis useful. Not the greatest of sessions, but a couple of trades nonetheless, both break-even. If you did enjoy the video, make sure you are subscribed for future videos like this one. Any questions, leave them down in the comments section below, and leave us a thumbs up as well if you found any value in this. Thanks again for watching, and I'll see you again in the next video.